of the Michael Garza show. We're talking about something so controversial it will make your head spin, and that is portfolio weight doesn't effing matter. That's what I'm trying to tell you. So we have been led to believe that portfolio weighting is the god that you must worship and blah blah blah. And in all actuality, that's complete BS. I'm going to tell you why. I'm going to give you my opinion on this, and we're just going to kind of roll from there. So why am I so against portfolio weighting? It's not that I'm against it. I just think it's overrated, right? So here's the thing. The problem I have with portfolio weighting is if one asset class is kind of lagging behind versus another asset class, and one asset class is doing really well, let the asset class do well. Don't actually manipulate that in any way. Let it do its thing. Now, if you want to add to a certain asset class, be my guest. I think the only time portfolio weighting really matters is when you're just starting out and investing. And then kind of after that, as long as you're buying and holding everything that you can, all that matters is that you stay diversified. To hell with the weighting of the portfolio. I mean, I really mean that. To hell with it. But let me put out a poll real quick. Does portfolio weight... Let's see here. Does portfolio weight matter? Let's see here. So we'll put that out as a poll. And yes, we'll put yes. And we'll put no. Let's make it a yes or no question. Does portfolio weight matter? And yes or no. Boom, here we go. So overall, my philosophy is it doesn't matter. I'm going to get out my handy dandy notebook real quick. So my philosophy is at the very beginning, when you're just starting out, that's when it really matters. But at the end of the day, honestly, I don't give two flying craps about the weight of my portfolio as long as I have these three core criteria of asset classes. I want commodities, I want stocks, and I want freaking bonds. That's what I want. Now, do I really give a crap if if my portfolio is doing really well in stocks? I'm not gonna get rid of any of I'm not gonna sell off any of my stocks. That would be ludicrous. That would be crazy, and it would be honestly mentally unstable of me to do so. So I could add a little bit, sure, without a doubt. I could add to like my bond position, for instance, if my stocks are majority of the value of my portfolio. Yeah, sure. Maybe I could add to bonds. Maybe I could use a little extra income, some fairly guaranteed yield. Geez, I keep coughing. Sorry, allergies, I guess. But yeah, what really matters at the end of the day is, are you diversified? And if you're a little overweight in stocks, that's okay. There's no shame in being overweight in one asset class, especially if it's an asset class that you're really familiar with. All that matters is that within that asset class, you're at least diversified to some degree, or at least to a lot of degrees. I think more diversification, the better when it comes to your portfolio. But when it comes to weighting of asset classes, I don't know. I really don't pay that much attention to it. I talk about it, but I don't really believe it. I don't really care about it, if we're going to be honest. Zoe says hello, said hi. Ethan says hello. Hello, everybody. Welcome to the show. Make sure you guys check out the poll. There's a poll below. I want to get your guys' opinion real quick. So does portfolio weight matter? That's the question I'm asking today. And to me personally, portfolio weighting might be the most overrated concept in investing, and it gets a little too much attention. What you really should focus on is just making sure that you're diversified in general. And look, if you're a little overweight in stocks or you're a little overweight in bonds, I don't think you should be overweight in bonds, me personally. It does kind of matter, like based on age, but like at the same time, I'm not going to really give two F's about like if I'm like, for instance, if I have like 80% of my portfolio in US and international stocks and then like maybe 10% of it in bonds and then 10% of it in commodities, I'm not really going to complain about that. In fact, I'm going to be like, well, obviously stocks are productive assets and they tend to grow a lot faster than any other asset class naturally because they're doing something, right? So bonds, on the other hand, I'm kind of like, I'm just kind of, I'm a little over the bonds. I like the guaranteed yields, but at the same time, I also like the growth the appreciation of dividends as well. Dividend growth is a real thing too. Like the thing is, I'm really stock heavy in my portfolio. I'll admit that. I don't really go heavy in bonds. I have U.S. and international bonds that I'm very diversified in, but outside of it, man, I'm not really focusing that much on it. Ethan Durete says, "Yes, sir." I have a friend of mine, Mr. Stevie D, Steven Durete. I always say his last name funny. It's pretty funny though. I tend to butcher my buddy's last name quite a bit. Let's see. Alex Trading Short says, hi, where are you? So I am here. I found another location in Mingus Park. Kind of a little more away from people. I kind of like it. It's kind of more towards the disc golf courses, but it's a nice little bench. It's not in the way of the little boardwalk because people tend to walk there. And I don't really want to interfere with their process. So I was like, well, people can still walk here. I've kind of made enough room for the trail. So I'm just kind of sitting in front of the camera. Make sure you guys check out the poll, though. We only got 2 votes in the poll. I want to see what people's opinions are. Does portfolio weight matter? That's a question I have for all you guys. And personally, I don't think portfolio weight matters. I really don't. I think if we're going to talk about a scale of matters, I think it matters somewhat, but not much. Like I said, most of my portfolio is U.S. and international stocks, and it's about 80%, I would say roughly. The rest of it is like 10% bonds and then 10% commodities. That's about the extent of it. I don't go any further than that. So I keep it pretty easy. I personally prefer productive assets like stocks because you hold them long enough and they end up just, working out in your favor. But if you're well diversified in U.S. and international stocks, you don't really have to worry about crap because diversification does give a bit of a security blanket to an unknown future. So if you don't know what the future holds, it's usually best not to over concentrate in companies that even though you know that they're good companies, if you still can't predict the future, you still want to stay diversified as best as you can. And I say that not only in U.S. stocks, but also international stocks. I'm saying like you got to be diversified across the world. That is the key, at least in my opinion. So you stay diversified, stay fresh. It's usually the best way to go. It's maybe it's an overrated opinion. I'm not too sure, but it's an opinion that I firmly believe in. But yeah, I like bonds for the guaranteed yield, but I do like productive assets like stocks for the eventual growth, not only in the principal value of the companies themselves typically, but also the dividend growth over time. And that's whether you have like real estate investment trusts, exchange traded funds, you name it. I mean, there's plenty of ways to make to at least preserve your wealth. The whole idea of investing for me is not to get rich quick. It is to preserve whatever wealth I've accumulated from my multiple streams of income. So my philosophy is, because I have multiple streams of income. I mean, my investment portfolio is one of them, but it's not my only one. Because the dividends that I receive, I just reinvest into other companies. Not in the same companies, though. I don't like getting into the same stuff. I like to get into different ETFs and stuff like that. So I'm never reinvesting in the exact same thing. In fact, I'm investing in maybe ETFs that are more like along the lines of like maybe more international markets, maybe more emerging markets, that sort of thing. And yeah, I'm constantly looking for ways to expand the portfolio. And my portfolio is a living, breathing entity at this point, the way it operates. And I will admit, the portion of my portfolio, God, it's coughing. The portion of my portfolio that I'm talking about is 80% of it is long-term buy and hold forever, never sell. 20% of it's actively traded, and it's 20% of it's just levers ETFs against Bitcoin. That is actively traded like a maniac. Now, I do have a lot of long-term buy and hold ETFs and also long-term buy and hold long-term companies. You name it. I have a lot of real estate investment trusts too, because that's my only exposure to real estate technically. But it's funny, the dividends that I get could technically pay for a majority of my rent, so that's kind of nice. But at the end of the day, I'm really trying to expand the portfolio, grow it, make sure that I can get more dividends over time. I do love bond yields, like I said. Like, I am a big fan of bonds. I have a lot of different bond ETFs that expose me to different sectors and bond sectors and things that I wouldn't be able to normally get a hold of as an average everyday investor. But yeah, I'm a huge fan. Let's see. Ethan says, I get it. A lot of people sometimes don't pronounce it right, but it's hard because it's Portuguese. Oh, really? It's wild. Okay, so we got 4 votes in the poll. So does portfolio weight matter? 100, all 100% of you say yes, and 0% say no. I swear to God, I'm like a contrarian. And I don't even mean to be. I mean, these are just my thoughts. These are my own personal opinions and also my personal experience. That in my personal experience, weighting hasn't mattered for shit. Now, don't get me wrong, you still got to be exposed to different asset classes. That's why 10% of my portfolio is exposed to like gold, silver, all that stuff, all the smart stuff, right? All the good commodities. But then there's another reason why like I'm exposed to things like the bonds and but stocks are my favorite. So I'm heavily diversified. I've got like everything under the sun for the US stocks. I've got everything under the sun for international stocks, anything that I can get a hold of through ETFs at least. And I will admit, it's very easy to get a hold of international companies, at least exposure to international companies through exchange traded funds that hold an entire index of tons of those companies. So my favorite one specifically, if I were to like put all of my capital into one specific ETF, it would be, if I had only one ETF I could choose, even though I have a ton of different international ones. But if I was to choose just one, VXUS would probably be one of my primaries. Because it's basically everything international, no US stocks in that one. And don't get me wrong, I love US stocks. Like I got US stocks, got international. It's just the thing is, you got to really protect yourself. Because even though I love the US and I don't ever want to bet against it, I don't know what the future holds. So while I'm also invested in US companies, I'm also invested in international companies. I gotta stay spread out. You gotta spread out your risk. Because to have, I'll give you an example. Like if I were to tell you that my entire stock portfolio consisted of only Chinese companies, right? What would you say? You would say that's very risky, because what if China one day starts hating on capitalism, which it kind of does because it's a communist country. But like, what if they full on just like get rid of all the listed companies? The Chinese government's unpredictable, right? It shows the U.S. government, but the U.S. government's more pro-capitalism, right? So you can't just be in one single country. Like I can't just invest in only Chinese stocks. I got to invest in U.S. stocks, Chinese stocks, Japan, UK, even emerging markets. You know, get exposed to emerging markets. Are fantastic, by the way. A little risky, but there are ETFs, exchange traded funds, that allow you to get exposure to those emerging markets. So it's something that you shouldn't necessarily count out. I love emerging market ETFs. Something you really got to check out, though. But check out this poll. We got 5 votes. Nobody's saying no. I'm actually shocked. I don't want to lean against this poll though, because you guys are saying, does portfolio weight matter? I say it could be as lopsided as you want it to be, man. At the end of the day, a buy and hold strategy and just trying to spread out your risk as best as you can is really the key. And just staying as diversified as you possibly can. Exposure is really the most important thing. Exposing yourself to all sorts of different companies, exposing yourself to bonds and commodities. Exposure is the key. Now, as far as weighting goes, I don't know. I really don't know. Do I really care, though? No, I don't. I just don't. I ain't gonna lie. My teeth are a little yellow this morning. It's because I didn't brush my teeth. I got up, I got done house sitting the cats and stuff, and you guys got to check out my review on Vita Coco, by the way. So look up, if you guys get bored, look up Garza Vita Coco. There should be my review on it. Pretty good. I kind of fluctuate between this and the pure coconut water, so it just depends which one's priced better. I like both of them. I'm not very discriminate when it comes to the coconut water, as long as it's good, as long as it's got got all the minerals and everything I need. I'm pretty much happy with it. It's some pure coconut water, man. I love this stuff. But yeah, it's fun sitting out here on this bench and being able to talk to you guys like this, and it's very peaceful out here. These I think they call them the Choshi or the Yoshi Gardens or something. It's really neat. Oh, dropping my pen. But yeah, doing these types of reviews, not reviews, but these types of live videos, it's pretty fun. I've been doing a lot of reviews though. I don't know if you guys saw some of my product reviews I was doing, but um, I did a review. I did a couple book reviews today. That was really cool. Or did I just do one? I can't remember if I did one or both. I think I did two. I did two reviews. I totally spaced out. So I got a grand total like 3 book reviews on the channel, and I kind of want to expand that because I've read a lot of books, and although a lot, it's funny because a lot of the books I've given away at this point, but the ones that I did finish that I haven't given away yet, I ended up giving away today. But no, it's fun to give away books. I usually just find those little those little wooden book lending houses things that you find around town, and I just kind of put the books that I've already read and put them in there. Because if I give them to the Goodwill, they're just gonna fucking charge people like $3 for it. I'd rather, if somebody really wants to read it, they'll read it. Hopefully they keep it or just lend it to somebody else once they're done with it. That's the power of books, man. Books are a very transferable medium once you're done with them. So I like to try to encourage everybody to read as much as possible, and and to those of you who can't read, audiobooks are still good. I mean, listening for information and reading for information are really key, I think, to expanding your horizons. Really, it means a lot. So expand those horizons, man. Let's see. Gotta give me a second, though, folks. Hold on. Oh, man. But cheers, man. Cheers. We got Shaba saying, I like volatility. Why do you like boring stocks? There's nothing wrong with volatility. I'm just saying I like companies with proven cash flow, right? And volatility only happens typically a lot if there's a lot of uncertainty in the world or uncertainty about the company, typically, in my experience. It's my personal experience there. Yeah, I like a mixture of stocks. I like small cap, I like medium cap, I like large cap. I mean, I'm super diversified. I'm not just in one specific. I'm not just in the S&P 500. I'm into small caps, medium caps, large caps. It really just depends. I'm not. I'm not necessarily a one-trick pony. I'm exposed to everything. I'm exposed to bonds. I'm exposed to commodities. I'm exposed to it all. I'm even exposed to different ways of getting money from the markets, like covered call ETFs. I'm pretty sure I got like, if I were to really kind of guess, because I don't really take the time to calculate my portfolio weighting. Because if you want to know the truth, I don't give a flying crap. But if I feel like I'm lacking in something, I'll add to my positions or find other things. So I have like one share of just about every covered call ETF that exists, just because it's a diversification of one specific strategy. I like the covered call strategies because during tough times, during bear markets, I mean, you tend to get a lot of good derivative income from that. So I love covered call ETFs. They've actually proven to be a good source of income during uncertain times. And if you only have them take up 5 or 10% of your portfolio, I mean, you still have room for growth. And during times of no growth or stagnation, they can really be a great, like I said, a great source of income during stagnation periods in the market. And that's about it, man. And that's the thing. Here's another thing. So there's a few S&P 500 companies, and there's a few companies in the Russell 2000 that don't necessarily pay a dividend. So it's like, how am I going to make some sort of money off of owning these? But I don't want to sell the positions. So in order not to sell the positions, sometimes a covered call ETF can be kind of a godsend and a savior in a lot of ways. So I love covered call ETFs. They're the best. Obviously my portfolio is not riddled with them. 10% maybe, but that's about the extent of it, and that's to keep it simple and to keep it easy. So, Don't want to basically just don't want to overcomplicate it. It's the key. Just no need to overcomplicate crap, you know what I mean? So but yeah, for me, portfolio weighting is the least of my concerns. I just don't think it's a big deal. And I think people make such a fuss about it. And to them I just say, calm down. Shaba says, excellent. We are rare. I don't know. I think there's a lot of diversified investors out there. They're just not as homosexual about it as I am, because I'm really gay for diversification. Now, you think that because I'm so gay for diversification, you think I would care more about weighting, and honestly, I just care about exposure, whether it's minimal or maximal exposure. But I just care about exposing myself. I'm not going to fit. Don't clip that. But I care about exposing myself to different what do you call it? Asset classes, But I don't need to be super weighted in one particular class. I just need to, if I have 5% of my portfolio in bonds, that's the way it is. That's fine. If I want to add to that position, I certainly can, but I don't necessarily have to. I think that portfolio weighting is honestly overrated and strict. And honestly, the only asset class that truly is the king, in my opinion, is stocks, securities. U.S. and international stocks, I think you should always dollar cost average into those two things. Dollar cost averaging into stocks is probably my favorite way to invest. Shaba says, do you know we are in a bull run right now? Okay. I don't really care. I mean, I'm still going to invest whether we're in a bull run or a bear market, so it doesn't really matter. If stocks go up, stocks go down, don't matter to me. Bull run, it don't matter. But yeah, overall, it's just, I'm always investing. It doesn't matter what the condition of the market is. I'm always going to be in the market. And, like I said, I want to be in every other asset class that I can, whether it's the bond market, the commodities market. It matters. It matters a lot. And I want to preserve my wealth. And the best way to preserve your wealth is never to hold cash. Because I think holding cash is irresponsible. I think it's unethical. Because if I hold cash, I'm holding on to something I know isn't backed by anything of value. So if it's not backed by anything of value, why would I hold it? Why would I care for that? Oh, I don't want it at all. I really don't. So that's kind of my key. Oh. But yeah, I'm a huge investing fan. I'll always be an investor fanboy. But hey, you guys, there's still a poll here. There's only 5 votes. So if there's anybody who hasn't voted in the poll, please, for the love of God, vote in this poll. So the poll question is, does portfolio weight matter? And I think we all know the answer to it. It's actually no. But I can't believe what my eyes are seeing. All 6 of these votes say yes. 100% of you are saying yes on this. Really? I mean, I really don't think portfolio weighting matters. I think it, everything matters to a small degree, but it's really the least on my list. Let's see. Shabazz says DCA is 100%. What is DCA again? Shaba, what is DCA? I don't know what the hell you're talking about, man. Is this a crypto? Dude, if it's some crypto phony baloney garbage money, dildo money, better not be dildo money. I swear to God. If you're talking about phony baloney dildo money, I'm not happy about that. Not happy about the phony baloney dildo money. I actually should probably do more shows over here. I like this. It's a nice shaded area, but I feel like I'm getting some good airflow, and there's still a little bit of sun hitting me, and getting the vitamin D. I could probably step out of here a little bit, but yeah, this is awesome, man. I also got my little handy dandy notebook. So this is Vita Coco. By the way, if you guys want to check out my review, I'm not going to describe too much about it, but if you want to check out my review on Vita Coco, just search on my channel or just search in general. Just look at Vita Coco Michael Garza or just Vita Coco Garza, one or the other. But yeah, it's just 100% coconut water, really good. Oh, I'm such an idiot. I didn't realize the DCA. I thought he was talking about something. You meant dollar cost averaging. Okay, you're just doing an acronym for dollar cost averaging. I'm a moron, but yeah, dollar cost averaging is the key. It was just, what do you? Oh yeah, does it make you gain weight? I don't know. I think it helps with weight loss. To be honest, I'd say that it does fill me up a bit. So like, it makes me feel like I want to eat less. I've been trying to eat more rice though. That's been a big deal to me. I've been trying to consume a lot more rice. Because like rice fills me up a lot, but it makes me feel it's just very nutritional. So I think I don't try to add anything to my rice. I don't like do any. I put some sauces on it for sure, but yeah, I'm a big rice guy. Shabazz says eat steak. I mean, I do like to make burgers and stuff. It's about the extent of it. But yeah, I'm really huge on rice, man. I love rice. I'm a rice guy. I avoid soy though. Avoid soy is my main thing. So if it contains too much soy, I'm out. I don't want to become a soy boy. All is soy boys. So we got 7 votes, man. Hey, I'm surprised, man. Everybody's saying that portfolio weight matters. When it comes to asset classes, man, I just want to be exposed to everything, man. So my portfolio is 80% international and U.S. stocks combined. That's all she wrote, man. I don't even really care what the weighting is for those either. Although I kind of do. I actually like kind of a 50-50 split if I can make that happen, of 50% international stocks and 50% U.S. stocks within my asset class. Yeah, it matters to me, man. Let's see. Shabazz says it's why you're thick. Eat steak and chicken for a month and see what happens. Yeah. Well, I mean, I do eat ground beef. I eat some pretty lean ground beef for the most part. I'm a pretty big boy, though. I'm not going to lie. I'm a big boy. I did have like a whole DiGiorno pizza last night. I went ham. I didn't really eat much yesterday except for the DiGiorno pizza. But it kind of got me a little thick today. But, I might need to do a little bit of walking. Make sure you guys like the video, though. The more likes we get for these videos, the more it helps support the channel. So please like this video, because let's see. Shabazz says no pizza or rice, 100% out. Really? Yeah, I love rice, dude. I was gonna say I think rice is better than bread. I mean, as far as my carbohydrate intake goes, I prefer. I actually like rice. I love rice a lot. I use my rice cooker quite a bit. It's another product I've done a review for. Check out my reviews for my rice cooker. But yeah, overall, like I'm huge. I'm a sphere. But really though, what I'm trying to get at and trying to tell you guys is, like the damn video, please. If you guys haven't liked the video already, please do it for me. Do it for Zaddy. Anyway. Yeah, overall, just, rice is awesome, dude. Rice is nice. That's okay, though. Shabazz, that's all right. I'm lost in thought. Hold on. Hey, thanks for the like, you guys. I appreciate that like. That like really boosted up the viewership, so I appreciate any likes you guys can provide. Thank you. Overall, though, like I said, Vita Coco is my main go-to. Well, I kind of fluctuate between depending on the price, pure cocoa but I do admit I like the. I think this tastes better. Oddly enough, so Vita Coco has a better taste. Um, let's see. They won't show says I send my M neighbor's hand. Oh wow. Shit. Well, it's good for you. They won't show, but hey, make sure you like the video. You guys, I'm trying to get more likes. We need more likes. We gotta mess with the algorithm a little bit. But yeah, overall, this is a fantastic spot to do a show. It's kind of like I said, very kind of shaded. You know, the bamboo trees are really blocking everything out, and I love it. But yeah, um, so everybody has voted, by the way. So everybody on this chat, all 7 votes, say yes. Portfolio weighting matters. 0% for no. That's surprising. So can you guys explain to me why you guys think portfolio weight matters? Considering everybody has said 100%, why is it such a big deal? Seriously, like why does it matter ultimately? You know, I mean, if you feel like you're lacking in one specific asset class, okay, fine, add to it a little bit. But I think people are way too strict about portfolio weighting. They won't show says, you ever been to North Carolina? No, I've never been to the East Coast in my life. Nope. It might be kind of fun to go to the East Coast, though. I mean, I would probably consider it. One of these days, though, I mean, I'll take it a step at a time. I'm already afraid of flying, so I'm doing everything I can to get over that fear. Might even hypnotize myself to enjoy flying. I don't know. Sorry, blanking out. It's just a little hot out here today, surprisingly. Make sure you guys like the video, though. Give me that like. Gotta get one more like here. Then I met my goal. I'll try to meet the goal at least. Yeah, overall, it's a very beautiful day. But yeah, you ever been to the West coast of Oregon, man? Like Washington, California, Oregon. Beautiful place. Beautiful out here. Let's see. Shabazz says diversity matters. Yeah, I say diversification matters. No, I think it's great. You know, I believe diversity is great. I just don't think it's strength. I believe that merit is our strength. That's the American way, is meritocracy. So that matters more to me than anything. And yeah, it's cool stuff. Overall, but yeah, any questions about this? I'm just more curious about the audience. Why do you guys think the portfolio weight's a big deal? Like, why is it a good thing? You know, nobody's really, because I'm curious. I mean, I've told you guys my reasoning behind it, but my reasoning is just like pretty up in the air for the most part. But I'm always very excited to see what people's opinions are. Oh, it's good shit though. Drink a little more of this shit. But yeah, overall, it's just like, yeah, my main dealio is I'll just continue to really weight my portfolio in any way I want. Whether I'm heavily into U.S. or international stocks, whether I'm heavily into bonds, you name it. Like, I could give less of a crap how I'm weighted in my overall portfolio, and that's just kind of it. But no, it's fun stuff. I think just staying. I mean, I would actually like to weight my portfolio more into gold. Actually, I think that's the one. Even though I don't give two craps about the portfolio weight, because I'd rather just have a ton of stocks, U.S. stocks, and international. I wouldn't mind actually just adding a little more gold to the portfolio. You know what I mean? Gold is awesome, but screw Bitcoin. Bitcoin is the worst. I will say that. Everybody's all hyped up on crypto, but at the end of the day, you're trading your money away for actually. Well, I wouldn't even say money, because cash is not money. It's not backed by anything of value, so it's not actually by all technicality, it's not money. But neither is Bitcoin. Bitcoin is not money either. In fact, the dollar and Bitcoin have one big thing in common: that they're both fake money. So one of the things I like to do, as you all know, is I love betting against Bitcoin. It's too much fun. I will always bet against anything that I perceive to be valueless. If it's a valueless asset and everybody's trying to convince me it's valuable, that's when I start betting against it, because I know that when people start drinking the Kool-Aid on a massive scale and I know better than them, I'll absolutely bet against them. Absolutely. And usually, and I mean, 9 times out of 10, I end up profiting when I know something is garbage. Preferably, I'm really a long-term investor. I don't like to short things very often, but when I see a shorting opportunity, and I've done my homework, and I know that what I'm shorting is a great thing to short because it's valueless or very overvalued, I'll do it. I'll absolutely do it, especially if I think it's just pointless. Other than that, it's like I'll just keep investing the way I invest and keep being a freak about it. It's kind of the key. And I love investing. Like, I'm addicted to it. Like, how like people are addicted to slot machines. I'm addicted to long-term investing, and I think that what you're addicted to matters, because I think everybody's got an addictive personality, at least for the most part, because everybody's addicted to something, right? So, for example, people who play basketball all the time, they're addicted to playing basketball. That first off points me to a T, right there. But what you're addicted to, there's nothing wrong with being addicted to shit. It's just what you're addicted to that matters. So everybody's like, oh, if you have an addictive personality, it's so bad. My philosophy is you can't help having an addictive personality if you just have one. I get addicted to all sorts of crap, but I make sure that I'm very selective to what I get addicted to, right? And the best way to get addicted to something is to think it through, right? Is this worth getting addicted to? That's a big question. Nobody asks themselves that question at all. I'm like, is this a good thing to get addicted to? And I'm like, okay, this is a bad thing, or this is a good thing. One of the reasons I don't drink alcohol as much as I used to is because I was like, yeah, this is a bad thing to be addicted to. It's fucking my health. I feel like shit, and I don't really get anything out of this. So I kind of don't drink as much. I mean, I'll drink like light beer and stuff, but that's about the extent of it. And even then, like, I'll even cap like how much I drink when I start drinking. I'm like, because everybody can have self-control. They just have to be aware of how flawed they are. If you're aware of how flawed you are, you could do anything. But if you're also aware of how strong you are, you could do anything too. You got to have a combination of both of those. You're strong and you're flawed. It's just good to admit both. Just be truthful. Truthful with yourself. It doesn't matter if you're truthful to anybody else. You should be, but really, you got to be truthful to yourself first, and then you can be truthful to others, because that's the only way you can ever be truthful. Because if you lie to yourself all the time, you're gonna start lying to others about shit too. So that's the way I look at it. Shaba says, but you always shit on Bitcoin. Some must understand this is ups and downs. Dude, it's BTC is going to crash. There's nothing. It's worth getting addicted to. Brilliant. Yeah, no, just here's the thing, man. Bitcoin is crap, dude. And the reason I say that Bitcoin's garbage is just because it is. It's just not worth anything. And there's just not much else to say beyond that. People get into this worthless garbage, right? So if people are into it, they're into it. It just depends on what they want to do, and totally their call. I just think it's a gambling arena, man. It's a gambling life that people lead. And here's the thing, it's also a sign of poor economic times when stupid shit like Bitcoin starts skyrocketing in price, because that's just a sign that people have lost hope. They're willing to believe that a Ponzi scheme is actually something valuable, right? And I keep saying that this is a decentralized Ponzi scheme at no end. And when people have been convinced that something of no value is worth something, that's when you know you're living in a clown economy, right? Mason says LGBT community. Oh, Jesus Christ. Well, we got 8 votes so far. We got does portfolio. You all 100% of you said portfolio weighting matters. That's a shocker, man. That's the one thing that this crowd, I don't align with this crowd on this one. Yeah, I really don't think portfolio weighting matters for shit. I just believe stay diversified in all asset classes, and you're pretty much home free after that. That blows my mind. But the poll is showing. That's the way the poll goes, I guess. Not one person said no so far. Wow. Mason says Jesus loves LGBTQ, blah, blah, blah. Christ loves... Okay, cool. Hey, more power to you, partner. But, yeah, I mean, like... man. What else we got? But yeah, as I've said before, and I'll say it again, Bitcoin is phony baloney dildo money. And because it's phony baloney dildo money, I prefer to bet against it. Now, I will, granted, full transparency, I got into it when I was actually really young and never sold. I still have my original holdings, but that's why I bet against it, because I'm like, well, this is a Ponzi scheme that's eventually going to pop and get destroyed, so I might as well bet against it to no end and then call it a day. And I love betting against Ponzi schemes, man. If there's one thing, if I can figure out that something's a Ponzi scheme and everybody's blindly getting on board with it, first, I ethically warn everybody, like I do on these shows, that it's a Ponzi scheme, and that if you get into it, you're just a degenerate gambler. And if you don't heed the warning and you keep getting into stupid stuff, that's on you at the end of the day, because there's plenty of warnings out there, but there's also plenty of people trying to convince everybody that, oh, Bitcoin's the future. It's not, man. It's an interesting concept on paper, but at the same time, in practice, it's really garbage. It's just a string of data that's not backed by anything of real utility. Take away the market value of Bitcoin just for a moment, right? Everybody tries to say, oh, compare gold to Bitcoin. Okay, let's do it. Let's do a little thought experiment then. All right, so on one hand, I have, pretend that I got gold in my left hand, and pretend that I got, well, Bitcoin in my right hand, which you can't see, that's invisible money anyway. Let's say I got both of those, right? Take away whatever the market value of Bitcoin is, take away the market value of gold. Ask yourself the question, what is this? What does it do? What can I use this for? I can give you a laundry list of things that gold can be utilized for, like gold's useful properties. And I look on one hand and look at Bitcoin, I'm thinking this has no useful properties except for it being a string of data at the end of the day. And yeah, I love the fact that it is a decentralized digital monetary platform. I think that's very innovative. But because it's decentralized, there's truly no way to back it by anything of value. You can't back Bitcoin by gold. And if you can't, or silver, or whatever you really want to, there's got to be something that backs it. The dollar's worthless because it's not backed by anything. I mean, come on. But I don't know. I'm a madman yelling on a soapbox, is what most people would say. But here's the thing. I'm still going to heavily bet against Bitcoin. I'm going to still do that. Let's see. Mason says, I love your videos. Thank you, partner. I appreciate you. Shabba says, bye. Let's see, learn charts. The only thing you need to learn, here's the thing. You need to learn not the charts. You need to learn about, one, human emotion. Two, you need to learn if what you're getting into is a Ponzi scheme or not, or is valueless or valuable is really the key. So I look at it very simply: is this worth getting into? Would I hold this for 10 years? And if I find that I won't, either I won't get into it or I will start shorting it. Is probably the key. And if I start shorting it quite a bit, I might hedge my bets a little bit, just a little bit though, by buying some of the thing that I'm betting against, if that makes sense. Yeah, I'm always hedging, man. Always hedging. Yeah, but overall, long-term investor. It's kind of the way I've operated for a long time, and I don't plan on operating in any other way. Stay diversified. I mean, there's really not too many principles that one would need to learn, but it's simple as that. But yeah, it's pretty fun. I've had a very, very good time being able to invest the way I invest and do what I do. There's just there's no other way around it, man. But coming down here, this is honestly a great spot in nature. I mean, this is actually in a park, but I got bamboo behind me. I think, flowing water down there. I'm not too sure. It might have dried up already, but this is beautiful out here, man. I love the coast of Oregon. It's such just a pretty area, and I can't help but appreciate it. Let's see. Shabazz says, learn Elliott waves and everything will get crazy. What are Elliott waves, bud? I guess I could always look that up later, but is that, I'm assuming that is some sort of trading pattern. I'm assuming that's like a chart pattern. But even if there is a chart pattern, dude, like, is it consistent? It's still unpredictable. Like, one moment people are all about Bitcoin, the next moment they're not. And honestly, it's pretty easy to figure out when they're not, because when a crash happens, man, a crash happens hard with Bitcoin. And that's one of the reasons why I continue to slowly bet against it using leveraged ETFs. Using a leveraged ETF gives me so much more freedom. And all the unrealized gains that I've accumulated from holding the Bitcoin that I have allow me to bet against Bitcoin without that much risk to me. It's kind of nice. But I believe that the crash is so much harder just because it's just not worth anything at the end of the day. Shabazz says, look it up, it's all markets. I don't know, man. I mean, markets are really driven by a few factors. One, emotion. There are fundamentals, obviously, that do matter. In the short term, though, what a market really is, it's an emotional roller coaster. It's people trying to decide what the right price for the value of something really is. So it's a huge emotional roller coaster. And but in the long term, it's really as Warren Buffett once said, in the long term, it's a weighing machine. So I look at the long-term prospects of anything that I'm getting into or anything I'm betting against. So obviously I bet against things like Bitcoin, and because I know the long-term outlook is pretty grim for it because it has no intrinsic value. So my formula is anything with an intrinsic value of 0 eventually goes to 0. People may perceive that there's value here, but there is none in all reality. All that matters is what is the actual value of the thing that I'm shorting. That matters. And I know that the actual value of Bitcoin is $0. Now, the market value, what the morons in the market are saying, they're saying it's worth like $120,000 per Bitcoin. And okay, more power to you, because no matter what direction Bitcoin goes in, I win either way because I treat it like a hedge fund. I do love the volatility, though. I will say, and I'm. Let's see. Shabazz says, you're not listening. It's the overall human brain on markets. There's a chart too. Okay. I'll look it up, man. I'll look up your BS. I think it's a BS philosophy. Because here's the thing, man. I think... Here's the thing, though. Once everybody starts knowing these patterns, then the patterns become worthless. I don't know. That's the way I look at it. I just say whenever Bitcoin's on a bull run, I bet against it pretty hard. Not really super hard, but hard enough. And I love betting against it, man. I'll always have a good time betting against this stuff, man. What else do we got here? Let me drink a little more of this shit. I do want to thank everybody who has subscribed to the channel overall. I mean, you guys are the reason that I make money doing this shit. So, to everybody, I really want to thank you. But hey, more likes the better on these streams. So if you guys do like it, better. 9 votes in every single one of you has said 100% of you have all said that portfolio weight matters. And this is shocking, man. Because in my opinion, it doesn't, because it's probably the biggest lie that's told to investors. And I mean, if you want to care about it, that's your prerogative. I just think it's so foolish. I think what matters is just asset accumulation. I want to accumulate as many bonds as I can. I want to accumulate as many stocks as I can. I want to accumulate. It's just all about accumulation. Now, if you're a little overweight on one particular asset class, then let it be. That's fine. As long as you know what you're getting into is good and really diversified, I can't think of any problems there. I just can't. So, trying to think what else I want to say real quick. Man, I've already done this for 51 freaking minutes. Holy smokes. What else do we got here? But yeah, Ponzi scheme. You know, Bitcoin's an obvious Ponzi scheme, and it just blows my mind that people fall for it. But then again, I mean, people have fallen for all sorts of things in the past. The dot-com bubble is a great example. Anything that had .com at the end of its name, people were investing ungodly sums of money into it, even though the fundamentals of the company were whack, like they weren't even good. That was surprising. You know, lots of BS, man. Lots of BS. So the tulip mania is another famous example that's touted all over the place, where people were, I guess there was like a discoloration of tulips or something like that. And I don't know the whole history behind this, but basically the price of them just kept going up and up and up. So people would buy tulips, these discolored tulips, for a certain price, hoping that there would be another idiot who would buy it at a higher price. And it's part of greater fool theory. So Bitcoin and the tulip mania have one thing in common. They're both virtually valueless. I mean, tulips are cool, but they're not worth like $1,000, right? So they're both pretty valueless, and people are trying to tell you that you need to pay this amount of money to get a hold of one. That's a little ridiculous. Now, I as much as I love absurdities, and this show lives in the realm of absurdities, I also like to call out that Bitcoin is more absurd than this show, right? And my show is absurd to the core. In a lot of ways, it's a bipolar show. But, you know, it's like, you can't, I don't know. I don't understand it. And hey, you know what? As long as there's gullible people, I keep making money. But, you know, because I'll bet against the dumb money. And any time people are trading their money away for Bitcoin, that's the dumb money. So I'll continue to bet against the dumb money any day of the week. And, yeah. And I'm taking a little bit of notes because sometimes it's good to rehash the stuff at the end of the video. But yeah, betting against dumb money, man. Any day of the week, brothers. It's a beautiful day out here. It's a beautiful day in the neighborhood. All markets are the same. It's our human nature. It's booked. It's called Elliot. I'll look it up, man. I'll look it up. Jesus. I'm just gonna bet against absurd stuff, like you know, just anything that's absurd, I'll bet against it, man, any day of the week. But yeah, it's just the way I roll. Let's see, but yeah, any other comments? Now, I'm curious, man. Why do you get so all 9 of these votes in this poll say 100% of you say that portfolio weighting matters? But I want to know why you think it matters, and also to what degree do you guys think it matters? Why does the weighting of your portfolio even really matter? Let's see. Oxy Overage says Garza is right. Bet against the bullshit. Absolutely. I will always bet against a Ponzi scheme, especially if I have an ability to do so. Like leveraged ETFs exist for Bitcoin. I get into the S bit so I could bet against the absurdities of Bitcoin because it is absurd. It's disgusting. It's a net negative to society. Like Bitcoin is legitimately a net negative. It's an abomination to society. So, like I'm an abomination to society. That's what Bitcoin and I have in common. We're utterly valueless. But no, like I will always bet against anything I feel has an intrinsic value of zero, or at least close to zero, or is being absurdly overpriced, that sort of thing. Um, I don't know. That's the way I see the world, and it's pretty fun. It's enjoyable. Let's see what else we got here. What taking some notes. I think I had a couple notes on what I wanted to talk about next, but I'm not sure. Let's see. I'm all over the place. Let's see. We talked about Ponzi schemes. I think are Ponzi schemes. Let's see. But yeah, I mean, there's plenty of vessels out there that allow you to bet against things that are dumb, and you could benefit from betting against things that are dumb. Um, so if Bitcoin's my top target, man, because Bitcoin's dumb. It's a net negative society. I say it a million times. I said it once. I said it twice. But yeah, let's see what. But yeah, I was talking about how now I wanted you guys to describe to me portfolio weighting. Why do you guys think it matters? Because I don't think it matters one iota. As long as you're just generally diversified, you could be overweight in any sort of asset class that you want to be. Like for instance, like I said, I'm like 80% like U.S. and international stocks. I could care less. Um, I mean, I want to be overweight in those just because they're productive assets at the end of the day, and I'd rather be overweight in those than anything else. But yeah, 10% bonds, U.S. and international bonds, 10% commodities, just generalized, gold, silver, oil, you name it. Um, but yeah, no, being exposed to all sorts of things is a good thing. But I prefer to be exposed to productive assets more than anything, but be very diversified within those productive assets. That's the key, at least. Um, so yeah, it's always many factors, many ways to do it all. So it's pretty cool. Yeah, let's see here. Oh, hello. Oh, it's okay. It's okay. It's a little dog. It's so cool. Let's see here. What was the other thing I was thinking of? Can I think of anything else? Let's see. David again. Hello, David. Let's see. Oxy over 8 says it matters in my opinion. It's there to adjust your risk tolerance and return. So the thing is, man, like I don't believe so. How do you like to adjust your portfolio then to match whatever weighting you want to get a hold of? Because for me, too many people talk about reducing their weighting and then putting it into the other asset class. Where I say like if you're like 80% stocks and 20% bonds, and if you want to like kind of even it out, I say add to the bond assets and then just kind of let your stocks sit. Because if you take away from the stocks that you've already the growth that they've accumulated, I think you're screwing yourself. But I think you should just add on to the positions that you think are minimal that you need to raise up if you really care about portfolio weighting. But too many people think of portfolio weighting in the form of negation rather than adding on to it. Because I don't believe you should take from one asset class to compensate for the other. I think that's bad practice. I think you should just add on to the asset class that you think is the weakest in your portfolio that you'd like to have more of, and then again, honestly, if the asset class isn't performing well, it's just not performing well, and that's okay. You don't necessarily have to. If bonds end up being a minuscule part of my portfolio, that's just the way it is, and I'm okay with that. As long as I'm exposed to the productive assets, and yeah, I have a huge risk tolerance, so it does. I guess it does. This is why I always tell everybody talk to a financial advisor because my risk tolerance is just like I just don't believe anything's that risky when it comes to investing. I mean, there are obviously risks, but when you're heavily diversified like I am, you know that you could sleep soundly at night, not giving two craps of what happens in your portfolio because you know you're exposed to everything, right? So exposure to everything, it's a big deal. But I think, let's see, Oxy over age says I'm 100% S&P and 0% bonds. I have no reason to hold bonds at my age. I mean, I hold bonds. I love the guaranteed yield. But I don't hold that many. If I were to guess, because I don't really take the time to weight my portfolio, I would say 10% bonds is probably what we're looking at for mine. If we're going to be honest, I may not pay attention to it, but I'm aware, for the most part, of roughly the estimations. It sounds a little counterintuitive, but surprisingly, it doesn't. What else we got here? I think that's about it. I legitimately can't think of anything else I want to talk about on this subject. Let me just kind of rack my brain real quick. No reason to hold. Yeah, I mean, I still think no matter what age you are, I think you should have some bonds in your portfolio. Not a whole bond. I mean, when I say bonds, I mean you can get a hold of bonds, a diversified index of bonds, just by getting into bond ETFs, right? There's several indexes out there that allow you to expose yourself to that asset class, and at a really diversified level within. So the funny thing is, my entire exposure to bonds is not through buying the bonds directly myself. It's actually buying the ETFs. And then those ETFs, those exchange traded funds, they hold the bonds. They hold them for you. So you get the benefit of the yields every month. I love it. So I like bonds, but they're not 100% of my portfolio. No. They're a very minuscule part of it. I prefer, to be honest, I prefer growth and dividend growth, and also principal growth. So that's one of the reasons why I'm so heavily weighted. Actually, I do a 50-50 split in between U.S. stocks and international, for the most part, if I were to guess. Like I said, I am so... I guess I just don't care about weighting. I just don't give two shits about it. I'm still diversified, and that's all that really matters at the end of the day. And also the ETFs that I get a hold of, they weight their portfolios in all sorts of different ways, and I don't have to focus on any of that, which is one of the reasons why I love ETFs so much. But I also love investing into individual companies on top of it. So, but yeah, here's the thing, man. Oxy over H, you said you're 100% in just the S&P 500. That's limiting, man. I mean, you gotta look. Diversification matters, brother. It matters. And as much as I love the S&P 500, and I think at the end of the day you'll be fine no matter what happens, as long as you have an S&P 500 ETF. But there's just so much more you can expose yourself to when it comes to assets. Like, you can expose yourself to I gotta stop saying expose myself. I'm in a park, but like, there's so many things. Oh God, so many things. Like, for example, there's an entire ETF called the VTI, which exposes you to the entire U.S. market, and then it's like 5,000 different holdings. And honestly, are all those holdings worth holding? Probably not. But the majority of them could be, and there could be some diamonds in the rough that are insane. It's all weighted by market cap, so that matters. But overall, my weighting doesn't really matter to me. It doesn't. I kind of look at it more sometimes of the asset class weighting, but hell, I don't really care. I just don't. But yeah, it's so much easier to be diversified in today's age than any other age, because of the exchange traded funds that exist. It matters. But don't take my word for it. Let's see. Oxy over age says, I will definitely diversify in the coming years. I'm really young and do not need that much diversification. I can handle the risk, and so far it has paid off like crazy. Yeah, and here's the thing, man. You are exposing yourself to the S&P 500, right? 500 of the best companies known to exist in the overall stock market. That's fair. They pay dividends. Awesome. They grow. Awesome. They're large cap. I like large cap. I'm a big fan of those. But at the same time, it's just like, like I've exposed myself to all the REITs that I can expose myself to. I love real estate investment trusts. It's It's honestly my only exposure to the real estate sector out there. Oh. But hey, I do want to thank you guys for taking the time to view this video, or this live stream, I should say. Um, let me see what else we got. Let's see. Oxy over age says, I will definitely diversify in the coming years. I am really young, do not need that much diversification. I can handle it. Oh yeah, I already read that. I'm like a broken record today. So that's what I get when I do like an hour long stream of this shit. But oh man, but yeah, as far as it goes, I diversify like a madman. I like to spread out my risk, like I spread out my cheeks, you know. And that's kind of the way to do it, man. Well, comparing diversification to spreading my cheeks is not a good thing. But it's funny, you know. Spread out your risk like you spread out your cheeks, man. That's the motto that I think nobody should live by, and yet I probably say that more times on this show than anybody. But yeah, doing the show whenever I can in public spaces is probably the best part. It's fun to be out just in nature because I don't like being indoors that much. I mean, I don't mind being indoors, but like, you know, when it's sunny out like this, I'm like, hell no, I'm staying outside. Even if I have to like kind of sit in a shaded area, I just need to be out in the elements. Now, this isn't much of the elements, by the way. I'm literally sitting in a park next to bamboo trees. It's pretty dope. So, I think I can keep this going. You know, if you guys like the video, I'll probably keep this going. So, you guys want me to keep going? If you guys want me to keep going, like the stupid live stream, all right? I know you want to press that like button. I actually don't know on the vertical platform how to like this stuff, but I hope you guys firmly enjoy it. Woo! Gotta wet my whistle. Okay, well, I'm not getting any more likes. That's okay, though. I actually, you know what? My voice is a little bit, losing my voice a little bit today. So, I mean, I'll give it a little bit of a rest. I mean, I've been talking nonstop for like an hour and 7 minutes, so sometimes you gotta take a little bit of a break. But I will say I'll try to do another live video here in a few. Still at 56% battery, which isn't too bad, so I could probably pull off another live stream somewhere. Probably go to one of the outhouses and take a quick pias. But outside of that, though, heck yeah. Thank you guys for viewing this stream. Check out some of my reviews on Vita Coco, and also check out my review on the rice cooker that I have. Rice is awesome. Rice is affordable. I will say that. It's way more affordable than standard bread, I'll tell you that. But thank you guys. I appreciate y'all. I'm out.